I'm going to give you a macro point, and then I'm going to give you a very micro point, right? I don't do, when we think about the cutting edge of the science, that's not where I come from, but I want to talk a little bit about cryptography and what sort of, why it's relevant, kind of what you need to know in this area. And then we'll talk a lot about kind of the business of blockchain. So here's the macro point. I was giving a talk to a bunch of, it was an executive education class, and it was a bunch of senior financial industry people. And I was talking about innovation in the economy generally, and I mentioned blockchain. And the first question, when I opened it up for Q&A, fellow raises his hand, he says, all right, Bitcoin, blockchain, isn't it all froth? Is there any fundamental there? How should I think about this? And perfectly fair question, but kind of a good macro opening question. So I'm going to open with that question because I just got it a few weeks ago. And what I said was this. This is somebody roughly my age. I said, cast your mind back to 1998, 1999. The roof is coming off on the internet. Everybody's pumped up about the internet. Web van and everything else, all the stories, right? By 2000, 90% of it is gone. And in 2018 in the US, we have more Amazon Prime subscribers than we have voters. And we have Facebook, and we have Google. So the transformation has happened. In 1998, Amazon was a book company. None of us could see that. At the same time, there were people in 1990, nobody could forecast exactly how it would play out. But there were a lot of people in 1998 that said, this is going to be big. So my point to this person was, when you have these fundamental changes in technology, you should expect 90+% of the experiments to go wrong. So when I look out at cryptocurrencies and IPOs and a lot of what's going on, 90% of it's going to disappear, in my judgment, in the next 5 or 10 years. And the underlying blockchain technology is going to be transformative over the next 10 to 15 years. So in other words, he wanted one-dimensional continuum. Froth, fundamentals, where am I? It's sort of like you need at least a second dimension, my friend, because you can't understand this kind of technological change on one dimension, right? And so that's kind of obvious to those of us that have been kind of watching technology over the years. But this person wasn't thinking widely enough about that. All right, so that's a macro point, maybe obvious to you, but I think it's very, very helpful. Here's a very micro point. When you think about cryptography and you think about what's going on, look, I don't work in this area, but there's one thing I know that I want to communicate to you because I think it's helpful for understanding why blockchain is so darned interesting, all right? So here's the very simple example, and I need to put it in these terms because I don't understand it in any other terms, all right? You take a file off of my hard disk, all right? It's a 10-page PDF or a 10-page Word file, whatever. You just pull it off my hard disk, or we pull it off your hard disk, but we'll use my hard disk as an example. That file, whether PDF or Word or any other format, is a set of zeros and ones. That's what it is. It's a set of zeros and ones. And there's something in cryptography called a hashing function. You don't have to know anything more than just that a hashing function is something where I can take a set of zeros and ones, a file, I can pump it into this hashing function. I'm going to call it hashing function number 1. Hashing function number 1 exists on computers all around the world. Everybody knows what hashing function number 1 is. Here's hashing function number 1. You take a file off of my hard disk and you pump it through hashing function number 1. On the other side, you get a sequence of zeros and ones that's 256 digits long. A very particular pattern, all right? And every time you take that file and you put it through hashing function number 1, you get the same sequence of zeros and ones. If I take my file now off of my hard disk, and on page 7, I change a 4 to a 5, or on page 3, I change an A to a B, 1 digit, 1 letter, and I put it through the hashing function, different sequence of zeros and ones. Now, nobody can look at that different sequence of zeros and ones and work backward and say, you changed that A to a B on page 4, didn't you? You can't do that, but that doesn't matter. Why is this relevant? All right. I'm just going to talk about a use case that doesn't have anything to do with finance. You've all hired people. You all know what a pain it is to do reference checks. And in particular, if you say, did Greg actually get his degree at Berkeley? It's a kind of a pain to get that, right? It's sort of like, sorry, we need a raised transcript. It needs to be stamped. Can't be a photocopy. Too easy to cheat. okay? And it's really complicated to figure out whether you actually got your degree at Berkeley, all right? So here's a situation where Berkeley says, here's a file. Here's the official file. We have it on our website. When you pass this official file with all the names and degrees on it, through hashing function number 1, you should get this sequence of zeros and ones. So when somebody comes and interviews and you say, you got the job so long as you pass the reference check, and that person says, here's a file with all the degrees at Berkeley, see my name on it, and you pass it through hashing function number 1. If you do not get the sequence of zeros and ones that Berkeley says is the official sequence of zeros and ones, you reject it. I reject it. Hand me a file that has your name on it, Berkeley degree. I'm going to pass it through the hashing function, and I'm going to get the right sequence of zeros and ones. As long as you do that, we're good to go on that piece, right? Sort of like credentialing. How do I create a way of, in a foolproof, tamper-proof way, saying you actually have this credential, and it's easy for me to check whether you have it or not? Now think about the whole badging process in education, and how do we credentialize people? Sort of like, you can say, oh yeah, I vouched for this person on LinkedIn, and sort of like, okay, but that's pretty loose way to do that. Or it's not just, normally when we think about distributed ledgers, and for those of you that have been reading a little bit about blockchain and Bitcoin and things like that, I will get there. But we often think of this as a way of sort of, I'm an economist, all right? So I'm going to come back to first principles. I'm going to talk about money. What is a money? It's store of value, medium of exchange. You have to go back to that stuff to sort of understand what the hell's going on out there. But if you actually said, all right, how do I think about Bitcoin? How do I think about what's going on? How can I measure a set of transactions? Take yourself out of income statement space, flow space for an economist, and put yourself in stock space, balance sheet space. In some sense, your human capital is a balance sheet. And I want to be able to verify that you got your degree at Berkeley, or that you've in fact had this experience at that firm. Here's your CV. You say, oh, I did this project, I did that, I was at this firm for these, sort of like all of that could be publicly available, right? So that you could just hand somebody a CV and they could just check the dates and all of the things you said you did. And it's sort of like, boom, it all checks out. All of those sequences and zeros and ones check out, or they don't. You fudge that date, you fudge that experience, you fudge that title, bang. Can't do that anymore. Now, that's a balance sheet item, that's human capital. But if you thought about who owned the art in 1945, interesting. Who owns this property? Title insurance. Who owns this property? You think title insurance is kind of, it's like, you mean you're not actually the owner? I'm the owner as best I can be, and I'm selling it to you, but we still need a title company in the deal. Go to India. Sort of ask, well, who owns this? Go to a lot of other places around the world. Ownership, balance sheets. So blockchain is a technology. I've said nothing about currencies. I've said nothing about transactions. I've said nothing about that. But when you start talking about blockchain as a way of having a kind of ledger, having a way of saying this is the official thing, and it's easy for me to check whether this is the official thing or not. It's like, ooh, that's really interesting. And so that is going to change a lot of stuff. I gave a talk, we were in London just last week, and somebody who's working, she was in Calais, working on the refugee crisis in Europe, in France in particular. And she came up afterwards and said, we are working on a blockchain for good project that is about helping people establish bona fide refugee status. It is really pretty hard, right? There are a lot of people who are not, by standard definitions, sort of qualified refugee status. And there are lots of people that want to be. So this is a difficult problem in the human rights space. That's what she's working on. One of our alums reached out to me. So Ripple is a company that works in this cryptocurrency world, and they have a foundation called RippleWorks. And a guy named Doug Galen, who's one of our alums, is one of the head people at RippleWorks. And he called me the other day and he said, we're doing a conference in September called Blockchain for Good. And that's interesting. I mean, when people start thinking of technologies as, does this create social separation or social inequality? Or is this one of the things that can close kind of social gaps? And if we're intentional about it, can we use it in ways that could be very pro-social? And he wanted to do a conference on that. It's pretty interesting. Now, I haven't said a thing about currencies or Bitcoin, and I want to talk a little bit about that. And then I'm going to open it up to you, right? But I wanted to start with the balance sheet rather than the income statement, and start with cryptography so that you could see, okay, everybody's got this hashing function on their computer. Everybody can know whether this is the official file from Rich's hard disk or not, or whatever file you want to talk about. It's kind of like, I get it. That's pretty simple, all right? So now we start talking about Bitcoin. Now, I do a little teaching in this area, but I have to admit, I have taken a reverse mentor. And I know many of you have these types of people in your life. My nephew, he's 26, okay? And he's just like a nut for cryptocurrencies. Like he's starting a crypto fund. And it's like, okay, will you have breakfast with me, okay, so I can ask you some questions? Because I have to give a lecture tomorrow in the MFE program, and you know more than I do, so I need to talk to you, okay? So I have breakfast with him. And one of my questions was basically the question, I was trying to think about, is this truly a fiat currency? Is there nothing behind it? I mean, crypto is really interesting as an asset class. First of all, if you said, so I'm an economist. It's like, I got to think about the supply side. I got to think about the demand side. I mean, equilibrium price is a crossing of a supply function and a demand function. I'm just never going to be able to get away from that, all right? So now, supply function. So we're like, well, this is interesting. Right? Why do we have so little confidence in a lot of emerging market currencies? Because we have no confidence in the emerging market central bank, right? It's sort of like, okay, so you create a currency board in Argentina or in Hong Kong because you try and create some credibility for the central bank, for example, right? But less than independent central banks create currencies that are very hard to be confident about. But that's a supply side concern. So Bitcoin is, the supply of Bitcoin is pinned down by physics. It's literally pinned down by physics. I don't want to go into the details, but it's sort of like you can have a lot of confidence in the supply side of Bitcoin. Lots of confidence, much more confidence than the Fed and the dollar on the supply side, okay? So that's interesting. Supply side is pinned down. Now what pins down the demand side? And so I go back to that question that executive asked me. It's sort of like, is it fundamental? Are there any fundamentals? I mean, Bitcoin feels like it's totally froth to me. So I basically said the same thing to my nephew. I said, Bitcoin is totally froth to me. Don't tell everybody I'm asking you the same question that I just answered in the executive education session. But I wanted to hear his view, and he basically said, you're just not getting this. He said, here's what I can do. I can take 100 shares of IBM stock. Okay? I can put them on a blockchain. And I give you something called a key. Just think of a key as something like, all right, I'm going to do an initial coin offering. I'm going to create a token, okay? I've got some coins in my pocket, but that doesn't matter, okay? It's a token. Call it whatever. Token 1. If you own 1 unit of token 1, then you own title to one of those shares of IBM stock, all right? So I'm going to issue the tokens. There's an equilibrium price for the tokens. Do you want to buy a token? And you say, if I have a token, then I have 100% claim to that IBM share of stock that's being held on this blockchain, all right? And that includes the dividends. I get the dividends when dividends are paid. I could sell that share of stock if I wanted to, okay? But that's what my token allows me. So it's sort of like, well, why would you want to own a token if you could just own IBM directly? But, I mean, that's a good question, and I'll answer that question. But the point is, here's an ICO, an initial coin offering, where I'm holding token 1, and token 1 is hard-backed. Token 1 is as valuable as 1 share of IBM stock. So it's sort of like hard-backed. So I'll come back to this question of why I might want to hold the token rather than IBM stock, but that's fundamental. And then the other thing that he said is, now, Ethereum. And he's explaining to me, all right, Ether is another very popular cryptocurrency, the second or third most popular out there. And he said, Ethereum is a code platform. It's a set of software. I won't go into what smart contracts are and all this sort of thing. That's not important. The point is, if somebody wants to use some of that software, the code, and they use that software to affect a transaction, If this happens, then that will get paid to someone, okay? It's an if-then statement. That's what a smart contract is. If this happens, this money will get transferred, okay? If I use that code, I pay a tiny little transaction fee to use the code, to use somebody's software. And that tiny little transaction fee is, who gets that? If I own Ether, if I own this currency, I get a little slice of all of those service payments that people are using or paying to use the code. So in other words, if I own Ethereum, if I own Ether, I own a little slice of a code platform. And the dividends, the royalties, the payments that are getting fed into it, I own a little slice of that. So to say that it is completely untethered from fundamentals would be wrong. There's actually a royalty flow that I participate in. Now, if people stop using that software platform, then there's no more royalty flow into Ethereum, and so there's no dividend back to me, and so that all dries up. But that's true of any company that I own, right? If people stop using it or buying it, it's worth nothing. It's over. So it's like, well, that's interesting. So basically he's saying, Rich, it's a continuum. I can create super hard-backed cryptocurrencies and do initial coin offerings that are just like super hard-backed, gold, whatever else, held in escrow somewhere that nobody can get to. I can do stuff like a code platform, which is like a business. I'm investing in a business. I think this code platform is going to live on, and I think it's going to generate a lot of revenues. I'd like a slice of that. Bitcoin is a complete fiat currency. There is no hard backing to it. There's no revenue that attaches to it and so forth. So I want to come back to that. It's sort of like, well, why does Bitcoin, even though the supply side of Bitcoin is physics pinned down, super confidence in the supply side, why is there any demand side at all? So I want to answer that question. But first, I want to go to the other end of the continuum. I want to go back to the hard-backed cryptocurrencies. So now you're Venezuela, and you say, we're going to launch, a petroleum-backed cryptocurrency, right? It's sort of like, well, in concept, you could do that. But part of it is, wait a minute. I mean, okay, let me go back. It's 1968. For those of you that took my international finance class, right? The Bretton Woods system is still with us. Stuff is pegged to the dollar. Deutschmark is pegged to the dollar. Yen is pegged to the dollar, et cetera. What's the dollar pegged to? Gold. $35 an ounce, right? Sort of like, nobody believed that $35 could buy an ounce of gold. The dollar had already inflated so much. Remember, the 60s is when the inflation really took off in the US. So the dollar's tether to gold was essentially gone. You as a private citizen could not in 1968 go to the central bank and say, here's $35, I want an ounce of gold. You couldn't do that conversion. Now, at least ostensibly, central banks could go to the Fed and say, here's $35, I'd like an ounce of gold. And they were supposed to be able to do that. It was called the gold window. France actually did that in 1965. But by 1968, the Fed had closed the gold window even to the other central banks. And the tether to gold was gone. So when Chavez or anybody else says we're going to create a cryptocurrency backed by petroleum, it's sort of like, can I really get my hands on the petroleum? I mean, is it in escrow somewhere where I can say, if I want to, it's totally convertible? Because you can't say it's in the ground, I promise. It's sort of like, that's not backed. That's not backed at all, right? So I'm not saying that anything, whenever somebody says, here's a hard asset and my crypto is backed by it, it's sort of like, no, you got to tell me a lot more about what that backing looks like for it to be truly backed, right? All right, back over to this end of the spectrum, Bitcoin. How do we understand why there's so much demand for Bitcoin? Now, this is a hard question to answer because it's not backed by anything. Could Bitcoin go to zero tomorrow? In my judgment, yes. There is no fundamental in the sense of, not a fiat currency. There's no minimum value that you can go toward, all right? Now, that doesn't mean it will go to zero. But so now, all right, I'm supposed to be an expert in currencies, right? So if you say, all right, what is money? Money is three things. You probably remember this from Econ 1, right? It's a store of value. It's a medium of exchange, right? And it's a unit of account. I don't know if you remember that. It's Econ 1, right? So it's sort of like, well, what the hell's going on here? So one of the things you could say is, why is Bitcoin needed? We have the dollar. Transaction costs on the dollar, dollar euro, dollar yen, dollar Swiss, they're tiny. At the retail level, you go to the bank, they're not tiny, but they're tiny for any institution that matters. So it's sort of like we already have a plethora of currencies with tiny transaction costs. Why do we need another? Isn't the space of needs in the currency space spanned by the currencies we already have? I would have answered that yes 10 years ago. And I think most of you would have as well. And the answer to that is not yes. Because Bitcoin got introduced, and it's getting used, and it has positive value, and there's no question about that. So now you ask, all right, I'm going to lock you up. You're a monetary and currency expert. I'm going to lock you up in a room, and you actually have to write down a model that helps me understand why the equilibrium price of Bitcoin is not zero. Even though we can have all this confidence in the supply side, what's happening on the demand side? And I think the key idea here is, as best I can tell, now I'm sort of in, this is not firm ground. This is my view. But this is when you go back to first principles, which I think you have to try and sort out what's going on, this is where my mind wants to go as a monetary economist. And here's the way I think about it. That, in fact, the dollar was not satisfying all the needs of the economy. Do you remember in another Econ 1 concept? I hope this rings true. The double coincidence of wants. Remember that phrase? You should remember that phrase, okay? It was only 30 years ago. It wasn't that long ago. All right, so we used to talk in Econ 1 about a Robinson Crusoe economy, a pure barter economy, right? There's no money. I produce shoes, you produce corn. Part of the problem is, well, I don't really need corn. I got shoes. And you say, yeah, you got corn, you can pay me in corn, but I don't really want the corn. And so money becomes really valuable there because we don't have to have the shoe person need the corn and the corn person need the shoe. That's kind of a really inefficient way of trying to get a transaction done, right? That's why money adds so much value. And that's the simplest example. So I guess one way to think about it is, there are a lot of black and gray market transactions, but not only gray market transactions that are going through Bitcoin. There are some people that basically say, I have an almost infinite demand for privacy. And I'm doing nothing illegal. I just don't want the banking system and the regulators and other people to be able to track what I'm doing. There is a category of people that looks like that. Those people do not want to trade the dollar. They don't want to, there's no way to trade the dollar and get my demand satisfied for privacy. So somebody says, here's Bitcoin. And it's like, that's what I want to trade. That's what I want to own. I want to do transactions in that currency. Right? So one way to think about it is, there was a demand for a bunch of transactions that the dollar was not satisfying, as liquid as it is. Now, some of these are illegal, kind of not pro-social transactions, but some of them, many of them, are perfectly legal. And the idea is, if somebody said, write down a model that helps me understand what's going on, basically what you're doing is talking about, for a certain category of player in the economy, we just went from a Robinson Crusoe type economy where you're sort of in a barter, I can't use the currencies that are available and satisfy my needs, to an environment where somebody introduces a currency that satisfies my needs and sort of, eliminates that need for to avoid the double coincidence of wants. And what is the consumer surplus that happens when you do that? Last point, and then I'll open it up for Q&A. People have asked, is a world currency coming? Is whatever currency wins the currency competition in the crypto space going to be the world's currency? And that central banks are going to be sort of ushered to the side, and that monetary control and all those things that we think about in central banking is going to be pushed to the side. Now that's an interesting question. I, of course, don't know the answer. But one of the things that I do want to say is, Bob Mundell, who taught at Columbia, won a Nobel Prize for a lot of different work. But one of the pieces of work that he won his Nobel Prize for was something called optimum currency areas. When people were asking, should Europe have a single currency, that was a hell of a debate. And almost everybody was making the arguments based on Mundell's work. So in an environment where labor is really mobile, right? So that unemployment in Germany or unemployment in Greece, right? that labor can just move to where the jobs are. You have kind of frictionless labor markets, and prices are very adjustable, and you're at full employment all the time. That's often an environment where you don't need a relative price called the exchange rate, moving around imports and exports and sort of being a shock absorber in the global economy. But when you do have a lack of labor mobility and people aren't going to be willing to move, and there's a bunch of unemployment over there, and you'd like to devalue or depreciate the exchange rate to try and create some competitiveness to stimulate that economy. So that's a world where you say, no, I need another relative price to try and mitigate some of these frictions, some of these problems, some of these distortions in the economy. And so the idea that the world is an optimum currency area, almost nobody would argue that, whether crypto or not. And most people were arguing Europe isn't an optimum currency area. Most people were saying the US is, but not by a long shot. And when you look at the criteria that Mundell laid down, you'd say, if the US is, Europe isn't. And of course, we've seen a lot of stresses in the euro and so forth, right? But so the idea that the world is going to kind of run to a corner solution and that we're going to have a single cryptocurrencies, I don't see that. Now, Bitcoin is used the world over. So I'm not saying Bitcoin isn't going to be used worldwide. But the question of we don't need all these other currencies are going to be sort of pushed out of circulation because there's a crypto winner? No way, not based on my reading of Mundell and so forth. And that's kind of where my mind wants to go. So I go back to the sort of store of account, medium of exchange, right? Why would I want to hold cryptocurrency that is backed by IBM stock? Well, if people will take my cryptocurrency as a medium of exchange, then it's as good as the IBM stock, and I have a medium of exchange function. And my IBM share was not a medium of exchange. People wouldn't take that for transactions. So in that sense, it's strictly dominating of just having the IBM stock underneath it, right? So you could start to see why, oh, okay, so I can sort of see that rationale. I'm going to stop talking. What do you want to talk about? Love to hear some stories or thoughts about what you're working on in the crypto or blockchain space, please.
My biggest concern there is really that the security aspect of it. So
yeah.
Ethereum has been compromised, Bitcoin has been compromised. How do we, that's going to take away from the confidence people are going to have that it's going to impact the supply side.
Yep.
So how do we, or do you see a way that cryptocurrency will get to a point where it won't be so easily, well, not easily, but so often hacked and corrupted?
Well, that is a big question, and I naturally don't have the answer, but that is a major concern. When you say hacked and corrupted, of course, there are lots of different ways that's happening. One simple way is, when some people hear ICO, it's sort of like the IPO market. I wish I could get in on a hot IPO, but I can't, and now we have ICOs, and I want to get in, right? And we've all read articles, the New York Times has run many of them, that sort of say, there was no company there, right? They issued currency, and you were buying currency. Think of currencies like owning shares in a phantom company, a totally fraudulent company. So you have that kind of thing going on. You also have people hacking the cryptocurrency purses of other people, right? So rather than hacking your Charles Schwab account or wherever you hold your assets, they hack your currency purse, and then once the stuff is moved, it's like almost irreversible. Essentially irreversible. So there are lots of different distortions and hacks and things like that. And I think, the other elements of it are sort of like, look, part of why the IPO market functions so effectively is because there's a bank on the other side who says, we'll do that deal. And it's a bank you respect. And a lot of banks say, I won't do that deal. I won't put that deal in the market at any price with my name on it. And that's a quality control function that's completely non-existent in this crypto ICO world as it exists. So part of the question is, how much is that quality stamp important for thinking about the financing of new economic activity, sort of the ICO part of it, which is separate from this blockchain as a balance sheet record, and it's separate from the cryptocurrency part of it, right? These are all kind of separable components of this world as it's emerging. But I think, another way to say it is, look, if you don't have anti-money laundering, for example, then the big banks can't play. They will never be allowed to play in a market where you don't have anti-money laundering standards, right? Regulators will never allow that to happen. So you will get shadow institutions that will say, okay, I want to play in that, and I'm not going to do money laundering, but it's sort of like, so You know, the idea that a cryptocurrency that isn't subject to money laundering standards could ever become the world currency and all the banks just start using it, it's not in this regulatory environment, impossible. So I think what's going to happen, like anything else, we think of, there's the crypto world and there's, you know, the dollar and the money laundering and all the supervision and regulation that the Fed provides world, right? And that continuum is going to fill in. And we're going to sort of see people, some people are going to say, I want to play over here, this is what I do. I have an infinite demand for privacy, or I have an infinite demand for black market transactions, and I live here. But there are a bunch of people that would say, I want to democratize finance. I actually like ICOs. I like the fact that it's not over-regulated. I like the fact that IPOs aren't systematically underpriced. I liked a bunch of the stuff that's happening here. And you know, you could think of Kickstarter and Indiegogo and some of the democratization of finance platforms as sort of being, you know, sort of precursors of what's happening in the middle of the spectrum. So I think it will sort that way, and people will have to make their own decision. Do I want to play in sort of the high oversight end of the spectrum, or do I want to play over here, subject to all these risks, right? I can't keep crypto at a bank that's regulated in general because they can't play. And as long as they can't play, it can't become the world, not as we know it. Good question. Question here, please, Kate.
One of the things that you have not addressed in talking about blockchain and cryptocurrency is the consumption of energy to do the calculations in the blockchain.
Absolutely.
And Margot will appreciate the consumption of water to
Yeah.
cool all those computers.
Yes. So that's a really important, so I want to separate that, the point you just made is very important. It's especially important when thinking about Bitcoin, but it's important to a lot of cryptocurrencies. And I didn't get into this because this is very much the place where people start to lose you, right? How does Bitcoin get created? What is Bitcoin mining? How does this work, okay? And so I'll answer your question because it's really important. The quick answer is, we call it a blockchain because in general, right, Berkeley, so I'm going to go back to my Berkeley example, right? Berkeley doesn't have a set of degrees and then we're done. There's one file and everybody, you know, here's the sequence of zeros and ones and that's it. No, Berkeley adds degrees every semester. So that file would be moving over time. And basically you want to add some delta. All right, here are the 1,000 people that just got their degree at Berkeley. And then you want to add that to the blockchain. That's going to create a different sequence of zeros and ones. And now everybody has to check it against that, right? So it's evolving. It's never stationary, right? Same thing in the transaction domain, right? So you do a bunch of transactions in Bitcoin, and then you say, or any cryptocurrency, and then you say, all right, we want to add a new block to the chain. These are the transactions that happened over the last 10 minutes, and we want to sort of, you know, in a tamper-proof way, add them to the block so that everybody can be assured that these are real and these are kosher. And that adding to the block is what Bitcoin mining is all about. And Bitcoin mining, as it presently works, is very energy intensive. If you win the right to add that 10-minute block, and there are lots of so-called miners that compete to be able to add that next 10-minute block, and I'm not going to get into exactly how that works, but if you win the competition to add the block, then you win some Bitcoin. That's how Bitcoin supply is augmented. You actually get paid some Bitcoin to do that. But you need to burn energy, and a lot of it currently, to add the next block to the blockchain. And when you look at all these miners that are trying to win the competition to add the next block, and you add up all the energy that each of them is using to try and win the right to add the next block, it is incredibly energy intensive and wasteful. And so people are trying to figure out, how do we scale this? How do we scale the addition of blocks to the blockchain so that it can happen much, much faster, not every 10 minutes, but every nanosecond, arguably, right, in the limits, and is much more efficient in terms of energy use. And that problem hasn't been solved yet. And it's still wide open. And if, you know, adding, you probably know the exact numbers, but we're not just talking about, okay, it's like leaving 10 lights on, right? It's like lighting a city the size of Houston, and it's getting bigger every day. It's a huge amount of energy. So real quickly, it's called, there's a criterion that you use to figure out who won the competition to add a block, and it's called proof of work. And work is basically how much computation did you do? And that correlates or is one-to-one with how much energy did you just burn. And that's part of the problem. So the question is, can we come up with other ways? One is called proof of stake, and there are other methods of doing this. I'm not going to go into it, but that's a huge problem. So as we start thinking about scaling this in a way that's environmentally even sensible, we have to get out of the current proof of work method of expanding the block. But let me be clear. That's a Bitcoin point, and that's a really important Bitcoin point. But Berkeley putting its degrees on a blockchain is not burning a bunch of energy. It costs no energy to take a 10-page file, a set of zeros and ones, and put it through a hashing function and check whether the zeros and ones match up. So don't look at the whole blockchain category and say, the whole thing is totally energy intensive and wasteful. It's not. But chunks of it are, and Bitcoin is definitely energy wasteful. So the sort of cryptocurrency that sort of solves this problem without trading off the confidence people have in the currency, right? Part of the worry is that if you use less energy, but it becomes gameable, it becomes, you could cheat, you can create false transactions, then there isn't enough confidence in the system to make that work. So that's the trick. Use less energy, but keep the confidence level high enough that everybody wants to play. Nobody solved that problem yet for Bitcoin. But the blockchain technology is what's going to transform the world, not Bitcoin per se, in my view. Maybe we have time for at least a couple more questions. Here and then here. But I think you've got the mic, and then we'll go here. Yeah.
Yeah. So I understand when you're right there, when you have a hard asset backing, and so the fundamental value.
Yeah.
I also can kind of get it, when you are in Ethereum world, and you can guess, how much worth this coding is and all that. But when you are in the blockchain world, I understand it's not zero. But why is it $8,000? I mean, as a quant analyst, I'm trying to understand where does that value come from?
But sorry, when you say it's $8,000, just explain what you
Bitcoin.
mean. Oh, the price of it. Sorry, got it.
So from zero, how do you get to putting a value? What is your latest thought on that?
Well, look, and nobody knows the answer to this. Nobody was predicting the path of Bitcoin. When I first taught this class, which was about 16 months ago, 18 months ago or something, right? Bitcoin had been bouncing around all over the place, and it was like at 60 or 80, or it was, and it got to 10,000, right, and above, right? And so it's been quite volatile. I think the quick answer is there are people that are big funders, right? Big venture funders, and you've heard a lot about these people that are saying, I'm in. I mean, it is a crossing of a supply and a demand function. If somebody said, I think this is the winner, suppose we said that under some probability, this is the winning currency. And I believe that it's going to become like the dominant world currency, and that lots of transactions are going to start flowing through this, and we're going to solve the proof of work problem, and we're going to get the energy level down, and we're going to be able to scale this, and it's like everything's going to move into this technology. Now, the probability of that happening, you might feel, is pretty low. But for anybody that assigns a non-zero probability to that, then you have to probability weight the value effect of that actually happening. And if some people look at that and they say, my God, with the total amount of Bitcoin pinned down by physics at 21 million in the long run, the payoff to that scenario, if it happens, is so large that I'm willing to place a pretty big bet. So I view it as kind of a big skewness bet, that it's sort of like the people that are going in on Bitcoin, many of them are looking at, this 10x potential return. And they're saying, I could lose it all, totally understand. This is not a normal distribution at all. There's like this 10x outcome, and there's this 0 outcome, and I'll put a chunk of money, and it's kind of like, what venture people do a lot of. And that's the best I can understand it. But it puzzles me the same way it puzzles everybody.
People also tend to believe, at least in some of the analysis that I've read, is that the incremental cost of mining, the incremental Bitcoin, is around $7,000 or $8,000. So, this is a Bitcoin bullish sort of analysis, but that theoretically is, the current floor or around the current floor. That's not my judgment, but that's some of the analysis.
Okay, so that's an interesting shadow price that you could compare it to, right? And I won't, that's an empirical question whether it's 8,000. But let's just assume it is 8,000. And now we thought about, all right, suppose confidence goes out of Bitcoin. And we asked the question, it costs, so I could create I could spend $8,000 in energy, create one new Bitcoin on average, right, from 8,000, sort of like, so that's the cost of creating a Bitcoin. And that's just a fact. But then you look at the situation and you say, but what is the equilibrium price of Bitcoin if people lose confidence in Bitcoin? It has nothing to do with the cost of producing one more, right? If you say, here's a widget, I can produce a widget for $50 and the equilibrium price should be 50. It's sort of like, no, that's not where prices come from. Right? If demand goes to zero, the price goes to zero. It doesn't matter what the cost of producing the next widget is. So you're absolutely right. That's one of the things people use to anchor valuation when it's so hard to anchor it in any other way. But I think we can all look at that and say, that's faulty logic. That's not going to stop it from falling through the floor if it wants to fall through the floor. Or potentially going through the roof if it wants to go through the roof, right? So anyways, it's really helpful to have value anchors. And then as soon as you have one that's well defined like that, you can start to say, wait a minute, if I go back to first principles in economics, does that really tether valuation? You realize pretty quickly, oh, wouldn't want to put my household wealth on that inference, right? How about a couple more questions and then, yeah, please, yeah.
Given the recent revelation of Facebook, Cambridge Analytica debacle, and people waking up to the value of their data,
yeah,
and seeing Facebook now as the middleman between their valuable data and the advertisers, do you, when you look into your crystal ball, do you potentially see the blockchain with their decentralized applications and this ability to have private networks as basically the end of Facebook?
Well, I think
how many years will it take?
Really interesting question, and of course I'm just going to speculate like lots of other people. But my own view is certainly no time soon. That I think Facebook just, even with the privacy considerations and the appropriation of data considerations, there are a lot of people that would say it's still worth it for me to use Facebook. But at the margin, will there be people that will start to say, wait, I have a competing way of managing my data. And my data, because of privacy or other concerns, is so valuable to me that I'm going to look into these competing ways. And we've just come out of a world where there was sort of like no competing way that you might choose. And blockchain is going to give you competing ways that you might choose, where you say, I can now appropriate my data. And I can choose to allow Facebook or anybody else to use them. And there will be some compensation for being able to use. So I will have ownership rights over my data. A lot of people feel like the internet in sort of the 1.0 version was a completely open system like that. The 2.0 version was you had appropriators of data value, namely Google and Facebook and others. And that version 3 will have, Facebook will not go away in 3.0, but in 3.0 you can start to say, no, I want to own my data. That's just who I am. I'm too uncomfortable sort of giving it away. And that there will be ways on blockchains and other ways of sort of being able to control that. And so almost surely, I think we are going to a 3.0 world, and there will be some clientele for saying, I'm sorry, I just don't want to use Facebook anymore. I'm giving away too much. But you also are giving up an awful lot by saying, I'm not going to use Facebook. And so those sort of alternative technologies for controlling your own data are not so well developed. But a lot of people think that's where it needs to go. Yeah. Maybe one more question. Thank you.
Dean Lyons, so my question is this. Like Bitcoin, as the first leading currency, serves multiple purposes, right? It provides you with an ability to trade within your network very quickly. It provides you with some kind of a stimulus, almost like a computer gaming winner stimulus.
Yeah.
That is hard to measure in monetary terms, because that's why people are willing to pay more for power, electricity units to trade it than its implicit value maybe. And then there is a third thing that, when you're trading internationally, regulators are sometimes slow to charge simple transaction fees. They may be sales taxes. They may be different transaction taxes.
Yeah.
Do you think all of these play into the part in how the valuation of a currency like cryptocurrency like Bitcoin comes about?
Well, I think to take the last one, I think for sure, right? People talk a lot about markets that are essentially regulatory arbitrage markets, right? And just AML, anti-money laundering, or other things like that, right? I think there are a lot of people that find the ease of trading Bitcoin or other cryptocurrencies because they are not subject to a lot of the, or an ICO that doesn't have the kind of SEC oversight or disclosure requirements. So there's certainly a regulatory arbitrage rationale that's very real. But when I heard the first two things that you said, it's sort of like, the dollar. The dollar is a vehicle for doing that. Oh, I can trade in my network at very low transaction costs. It's, yeah, the dollar. Or, you know, I have this kind of gaming trading opportunity and, you know, it's fun to trade. It's sort of like the dollar. You know, I can trade dollar euro even as a retail player for, I mean, it's not quite as small a transaction cost, but it's really small. So the first two, while I'm not saying they aren't present, you have to ask the question, is Bitcoin really better in those first two motivations than dollar euro is? And maybe it is. Maybe I'm just missing something. But I think it doesn't feel like Bitcoin dominates in those ways. A lot of people love trade, you know, they're day traders of currencies, right? And so some of that day trading, you might imagine, has gone to Bitcoin, but it's in the dollar as well. So I don't see Bitcoin as sort of totally dominating the dollar in that way. I think I should stop there. Thank you. So, you know, going back to kind of where we started, Berkeley is an incomparable place. Berkeley stands for incomparable stuff. This is a time to stand for values that we care about. When people ask me, why do you have so much confidence in the future? A huge source of that is because there are institutions I believe in that will be doing work based on values I believe in long after I'm here. And Berkeley's one of those places, right? So a lot of you are putting a lot of your time and effort and your investments back in this institution. And it really, really matters. So let's lean into one another. Let's keep all of that going, okay? Go Bears. Good night. Thanks. Thank you. Thank you.